Okay, hi traders, here's a new video. First of all, the risk warning. Your invested capital may be at risk. Don't trade with money you cannot afford to lose. And this video is not an investment advice. So this video is another live trading explanation video of those trading setup which I have demonstrated in the video, in the ebook. Get this ebook, it's for free. You'll find the link in the description. This ebook contains the most important candlestick pattern, chart pattern, binary option, turbo trading concepts, market condition, trend identification, rejection and candlestick math, breakouts, and so on. And all those chart pattern and other things could be also applied to Forex and digital options, which I will show you in the near future. So, and now let's see if I can explain you a few things before I'm gonna explain you the trading setups. So you need some basic knowledge, and that is a part of those candlestick pattern which I have explained here, yes, which you should learn also, yes, and they are really important. And chart pattern like double top, double bottom, and head and shoulders, and so on, yes. I can only recommend to you to understand those concepts which I'm telling you now. That is maybe one of this of the trend channel. Yes, the trend channel is important, how you can identify the strength of the trend. Yes, if you have a strong trend, a healthy trend, a weak trend, or a ranging trend market. Yes, that is about. Then get this video where I'm talking about candlestick math, while you will see that candlestick math is important because you have to calculate candlesticks. What is the sum of those candlesticks? This pin bar, yes. What is the sum of this 5 minute, 1 minute candles? A 5 minute candle spinning top, yes. And that is what about this candlestick math. Then watch this video about the rejection. The rejection part here, this video explains the rejection, how it's looked like, what it can be. Yes, and here I have already demonstrated that the rejection is only a small part of the trading setup. The trading setup should be requires the trend, the key level, the pattern, candlestick pattern, and the rejection. All those four things are necessary to get a good trading setup. And then we get here the market condition, which is also important to understand if you are in a healthy market, uptrend, healthy market, downtrend, a strong uptrend or strong downtrend, a strong trending market, or in a consolidation area. And that is important to understand because depending on the market condition, you can decide if you are doing a continuation trade or a reversal trade. So that was this one. Then the EMAs, I cannot recommend this too often because I get in the Facebook group questions about what are the EMAs for and so on. So traders, you have to know that the EMAs are a lagging indicator. I have explained this so often, and they are good for trend identification and as dynamic support and resistance if you're doing price action. Yes, you wait till price gonna touch, cross, or reject from such EMA, and then you enter into a trade. But you don't do trades by crossing EMAs. That is not reliable. On binary option turbo trading, you cannot rely on crossing of EMA because it takes too long. Or you have expiration time above 3 minutes. Yes, 2 or 3 minutes, 5 minutes. Then you can trade also crossing of EMAs. Yes, but I will not recommend this to you because it could get out of the money. So you have to understand that market is moving in waves, and this was an uptrend, and this uptrend is stalling because this was here low, and that was lower low, and for being an uptrend, it should be a higher low and a higher high. And here we have a higher high, but we have a lower low, and that is not anymore an uptrend. That is a first sign that there will be a retracement or a reversal coming up. That is the basic concept. Yes, you have to understand this. So, and then we get again to this kind of setup where I have explained the rejection again. And here again, this kind should be pinned at any time, any place of your desk, yes, or trading station or whatever, yes. You have to denote the trend, key level, candlestick pattern, rejection, and that is the trading setup. And if you're doing your trades based off those 4 things, you are going good trades, yes. If you are going to lose, it can happen, yes, because the market is almost random, yes, but if you have those 4 things together, you have a good trading setup and you have done everything right. You have the good habit when you're doing this. So, and then we have here the fake breakouts. I have seen again and again Facebook group, in a Facebook group, pictures, screenshots of fake breakouts where traders gonna lose the trade because they don't understand what a fake breakout is. And the fake breakout, those are things are fake breakouts and all variations of this. Yes, because I cannot show you every kind of candlestick. There are so many variations of this, yes, that you have to understand that evening star could look also with two dojis or with a small candle in between, something like this. Yes, it's always or the EMA or the Fibonacci level or the support and resistance could be also placed in somewhere else, somewhere here, yes, or somewhere here. It's not necessary that it's only there, yes, but so that is what's fake breakout. This evening star could be also this with this doji here, and here the green candle and here the red candle. You have to understand this, that are only images, and it has not to be one-to-one the same. You have not to memorize, and you have to understand only the concept. So, and then we get here to the last one, that is the market reversal and the market retracement. You have to understand that in a higher time frame, a retracement is in a lower time frame reversal. So, and this retracement here in the 5-second chart would be also a reversal, this retracement here, yes, because it's scalable. You can do it in lower scale and higher scale, yes, because it's like fractals similar to each other, yes. If you are watching a 5-second chart, it's looking like a 1-minute chart, a 1-minute chart is looking like a 50-minute chart, and a 50-minute chart is looking like a 1-hour chart, and a 1-hour chart is looking like a 1 daily chart, yes. If you didn't know what kind of time frame it is, you would not recognize this, yes. So that is what I mean with similar to each other. And then we are coming now to the trading setups, which I'm talking about, yes. And this trading setup, there are 2 different types of trading setup. The first trading setup is those one which are a continuation trading setup, like this one, for example. Yes, this is a continuation trading setup, and this continuation trading setup is because we have here downtrend, and the downtrend is in the same direction like the trade, and this is a reversal trading setup where you have the trend which is in the opposite direction of the trade. So, and that all continuation trading setup has to be done in a strong downtrend or strong uptrend, and all the reversing trading setup has to be in a healthy market, like I have shown you before. Yes, that is. But there are some Facebook group members who are posting those kind of trading setups with their trades. I like this. I wish some more would do this. Yes, posting their trading setup. I don't know which name it was, but I have seen this. Really nice. Yes, he has done a trade and has put some one of those things there to explain those trades. That is really nice. That helps all Facebook group members really, really, really good. So, okay, that was this one. Let me see if I can show you now a trade, some trade based off those things which I have explained. And we see here, let me see if I can find one. So, okay, we have here a special one, yes. Let me see if I can show you this, yes. So we get here this one, and we have two in a row. I don't know how I could do this, yes, but I have done this. So let me see if I can show you this. So 1 second. So we have here 1 second. So okay, we have the first trade is this one here, yes, this one, and you can see this here. We have here the 50 EMA. You see here The 50 EMA is this one here, yes, this is a 50 EMA in this example, yes, only to demonstrate this to you. We have this 15 EMA, this doji rejected from this 50 EMA, yes, and I entered into a put here, and so let's see. Because of the rejection, we have a downtrend, like in the image, yes, and then we got here a rejection from the 50 EMA, yes, a little bit high, yes, but nevertheless, it's no problem. So, I entered immediately into this trade without any kind of rejection, yes. And I show you this also with the error there that I had understood that we have a downtrend here, a reversal here, and the downtrend, and here we got a rejection from the 50 EMA, and you see price is going down. So let's see. And that shows really, really good why you should sometimes enter immediately into a trade. Because you see, this running candle doesn't gun above this level. It doesn't gun above this level. Okay, now, but it was already in the purchase time. Okay, so let's see. And then it's got a rejection above again. So this was this one. So let's see. You see how it's going. We have the downtrend. So, and you see, it was in the money, but it ended up really close, yes, because this kind of area here acted like resistance area, yes, and that's the reason why this isn't gone above this level. It was really risky, yes, but we had the downtrend on our favor here, and the setup was this one. You see how close it was, yes, and but it was this setup, and after this setup, we get now this kind of setup here. Let me see if I can show you this. This one here. Immediately after this, I have done this trade. You have only to imagine that here before this kind of dragonfly doji, there was a doji. The doji here, this green doji. Yes, but this is this doji here. This doji doesn't mean anything. Yes, it was only a sign that we are heading down further, that we have a strong downtrend because price got rejected from here. And that is what I'm going to show you here, that it could look like this, yes, but it could look also different. Important is that you understand the concept. And the concept is only that we have here a strong downtrend. This candlestick was a retracement of this downtrend, and so you can do another put on the next candle without any kind of rejection. And that is maybe what I have done here too. You see? Yes, you see, I entered into this trade and then it's shooting down, yes, because I was expecting this because of the downtrend, yes, and this kind of candlestick has shown that we are not heading up further, that we are heading down instead. So, okay, that was this video about the double top and double bottom, yes. Let me see if I, yes, okay, but that was no double top. So, at the end, this is what I'm showing you here, yes, that it could look like also different. It could look like this, what I have shown you. It doesn't matter how it looks, you have to understand only the concept, and you see it doesn't got above this level. So let me see if I can show you another one. Okay, we switched. So let me see if I can show you another one. So, and now we got again this kind of setup here. Let me see, I have shown you this one here. It's looking again a little bit different from this one. This one here, yes, the shooting star setup. And that is here, you see, we have the same scenario, only the candlesticks are looking different, yes, but you see, we have here a strong uptrend, but here this trend is going weaker, because we got here a strong resistance area, and here we have also a lot of resistance areas, yes. And now I'm going to show you this one here. I will do pause when it's the next candle will formed. So let me see. Okay, now the candle will form. Another 5 seconds, and the candle is ready. Yes, and okay, you see. So, and this area here now from this candle and this candle is acting now like a resistance, and that's the reason why you can enter here into this shooting star with a put without any kind of rejection, because this candlestick is telling you the same thing like all the other things, that here the trend got weaker and weaker and weaker, and this should be a call, yes, but it was a put here, yes, and that means that there will be now a reversal, and that's the reason why I entered here immediately without any kind of rejection. You see, I entered immediately into this trade. It doesn't purchase at the first attempt, but then I entered, and you see on the closing price, and that was sure that this would go down, because it was a good uptrend, a nice uptrend, and then this uptrend got weaker. Yes, weaker and weaker, more weak, and then it was created this kind of shooting star, which will unfold mostly on the last few seconds of the expiration time, or purchase time. Yes, expiration time, purchase time, all the last few seconds, and this is what often will happen. And you see how price reacts here on this kind of wicks, or this acts as a resistance area. Yes. And that's the reason why this trade worked out, yes, because there was those kinds of wicks here which are creating a strong resistance. So, and that was this example now. I hope you understood this, that the candlesticks are looking always different. If you like this video, do a like. If you didn't subscribe, subscribe to my channel. And if you have something to say, let me there a comment. I'm happy to hear from you. So I would say stay safe and bye-bye.